The first risk is that there's some delay in the release of jobs data next week, which would be, immediately after the shutdown is announced. And it certainly does complicate matters for the Fed. In terms of impact on the broader economy, these shutdowns tend to just be kind of drops of water in an ocean, but it complicates the decision-making process.
Everything, of course, depends on how long this is going to last. In terms of the data, yes, it's going to sort of mess us up in terms of data analysis, but this is why we should never be looking at one particular report like the BLS. Probably we're going to start leaning on more of the private sector reports like the ADP, just to get an overall picture of how the labor market is panning out. And the fact that, there is this threat now of permanent firings now, as opposed to just furloughs, that will also weaken the labor market even further. And of course, now we've got this whole H-1B visa issue at play. This is all a lot of factors coming in that's going to really, play a lot of havoc, I think, on the labor market data.
The instinct is going to be to stick to the plan for October and go ahead with another rate cut. But I'm seeing some risk about the outlook for a December rate cut. If the economic growth proves to be as resilient as the latest data suggests it is, if inflation proves to be as sticky as the latest data proves that it is, then maybe the Fed doesn't get in that last rate cut